Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to do a Palantir stock analysis. So Palantir technology, which as we have seen in the past few days, it dropped a lot and today as well, minus 7.5% basically. So probably it's time to ask yourself, is it time to buy the dip on Palantir stock? So in today's video, I want to show you what, in my opinion, is the fair price of Palantir. In order to understand how far can Palantir continue to drop, is that enough or can it go even lower? So what's the fair price? It's the only way to try to understand that. So the only thing I ask you is please leave me another like, it's very important and I thank you for it. And subscribe to the channel so you don't miss any new updates. Let's begin. So Palantir technology, obviously I don't want to show you all of that. I'm pretty sure that a lot of YouTubers have already covered that. I'm just gonna briefly tell you what in my opinion are the good things about the earnings, not to actually put too much attention on the loss itself, because basically all of it was due to stock-based compensations. So if you eliminate that and you look at adjusted earnings, they have done pretty well actually. So the end of the quarter, 47% revenue growth, 17% adjusted operating margin, and 21 new deals signed in Q4, each worth 5 million or more. Now, one interesting stuff, very interesting, is the partnership with IBM. Basically gives the opportunity to Palantir to have 2,500 people in the Salesforce division, because before of that, Palantir didn't have actually a lot of salesmen. That obviously helps Palantir to continue to increase the business and getting noticed. Another interesting stuff is the multi-year contract with Rio Tinto. Obviously, when you have a business that works with contracts, that's the good and the bad of Palantir right now. Usually I like more stocks that they sell to basically normal people, so a vast majority of people. That's because it's easier to get high volumes. While when it comes to business that are based on contracts, so you need a government or you need an institutions. But when you are that kind of business, it's very important when you sign big, especially multi-year contracts, in order that the revenue can come not just for 1 year, but coming on in the future. So that's great. We see that the commercial business, sadly, as of now, is below 50% for Palantir, with a total amount of 482 million. That's the government part, so it's still the major, let's say, customers of Palantir. Anyway, if they continue on that pace, it's likely that they will continue to decrease this percentage, and that would be great for Palantir, because let's say that one day the government doesn't want to invest anymore that kind of money in this kind of stuff. Well, if Palantir has obviously all different customers than just 56% of the government, that's obviously better, also in terms of diversification. Anyway, that's basically one of the most important things. We see that the revenue from the top 20 customers went up in 1 year. Even more importantly, the concentration, right? So what I was telling you before, a little bit of diversification is obviously better going on. So in 1 year went down from basically 67 to 61%, and if that continues to go down in the future is obviously a good thing for Palantir. But then let's take a look at the important things of the full year revenue, plus 47%. It touched the goal of the 1 billion. We see that Q4, the government sector up huge, 85% year over year. And that's an interesting stuff as well. We can see that the adjusted gross margin. So it's a very actually efficient business in terms of gross. We went from 71%, which was already high in 2019, to 81%. So the software business in general, it tends to have low costs when it comes to just the costs of revenue. So 81%, 84% in Q4. That's obviously great. After that, you have costs, you have research and development, marketing, all this kind of stuff. So obviously when it comes to the end, this percentage actually always went negative from Palantir. But here it comes the ability to scale a business. When you have these kind of gross margins, Palantir should be able to grow and scale. Now, what is, in my opinion, one of the most important things about this presentation, and probably is one of the reasons why the stock dropped, in my opinion. Now, I know that there is the fact that the old shareholders, they are now able to finally sell the shares in the market. So a lot of people are afraid of that, and we tend to give basically all the explanation of the crash that we have seen in the last few days to that reason, and the fact that they posted a loss because of stock compensation. Then people kind of misunderstood that information. But in my opinion, another very great reason is this: the long-term orientation that they gave. So they are saying that the revenue is going to be around 4 billion or more by 2025. Now, when they released this information, actually the market cap of Palantir was way above $50 billion. Now, you understand that the price to sales ratio was above 10, was around almost 12, the sales of 2025. So that's huge, okay? So in my opinion, this long-term orientation has helped the price to come down. But you are going to see that with real numbers in the valuation just in a few seconds. Here they're saying that for the full years, they expect the revenue growth of excess, so to surpass 30%, which is great. And for Q4, they have already done basically an estimate of 45% quarter over quarter. So that's fair enough. Now let's come to the valuation actually, in order to understand whether the price today, is it really cheap or not? So what do we do usually? Now, first of all, I want to see the competitors of Palantir. Not the competitors, the real competitors in what they do, but other software companies, right? So here we have most of them, but the problem is that, for example, Salesforce, pretty new, it's not very much profitable yet. Yes, they reached profitability, but they don't have much history. At Zoom as well, same stuff. Now, Microsoft, obviously they do software, but they also do a lot of other stuff, so it's not a great competitor. Apple, the same. In my opinion, something that is mature and has history, and we can take some numbers from him, is Adobe, which is a very healthy business, in my opinion, as well. So now when we check Adobe stock, basically we realize, we go over there, and the net margin, look at that. We have the history until 2011. Now, that's the net margin. It went down a bit during 2013, 2014, but since then, basically, it started to scale properly to reach this year 40.88% in net margin. So that's what I was telling you before. This software business, once the product is successful, it can actually scale and be very profitable. So that's what I like about Palantir. But in order to do that, they have to scale. So we are going to see whether they will be able to deliver, actually. This is, in my opinion, a golden result. But anyway, as we can see from here, Adobe can, in my opinion, be compared also because, you see, that's basically the same stuff, the same type of business. Look at the gross margin. Cost of goods sold, very low. And then you have gross margins all above 80%, right? So Palantir is a little bit less than that. But anyway, as I told you, Adobe is mature, so it can be considered as the gold benchmark, right? So in order to have an idea on valuation, because we don't have much history. So when it comes to try to understand those things, obviously I put revenues. So those are analysts' expectations. And then here it comes my scenario. Now, do you remember that in 2025, the guidelines was 4 billion in revenue? Actually, I put a 30% growth rate until 2025, and then a 24% until 2028, so that in 2025 I get a 4.2. So actually that was very similar to their expectations, in line with what they said. Here it comes the magic. Now, For the first two scenarios, I have considered a bull case for the margins. What that means is that Palantir will continue to scale and grow in order to finally reach the year profitability, and from that going on and scale. Now, that's a very bullish assumption, okay? Keep in mind on that, because that's very similar to what Adobe has done since 2014. Look at that, okay? So that's the same path. Now, I'm not saying that that's easy. I'm saying that that's probably a dream for Palantir. Anyway, it's a scenario that can be possible, so I have considered it. Free cash flow to net income margin, very similar to the one of Adobe, so around 120% on average. Then let's put all of that in the discounted free cash flow formula. So the first two growth rate, 30 and 24, right? So in line with what they are saying in 2025. The requirements, I always consider the same for all the scenarios, so a 10% discount rate and 3.50% perpetual growth. For the first case over there, we will have a fair price of $25.80 per share. So remember how the assumptions were bullish, actually, so very great with margins, scalability, profitability, like Adobe. While that one is really the dream, right? So I have used the same exact margins, but I put a 40% growth until 2025 and then 30% going on to 2028. So in that case, it destroys their expectations of 4 billion in 2025. Just to make you understand that this is basically the best case scenario for Palantir, in my opinion. And we can see that the fair price with this scenario today will be $36.42 per share. Now, what I have done here is actually putting once again back the forecast table and say, well, probably let's consider a scenario where they scale, that's right, but they don't reach the brilliant levels of Adobe stock. So what I did, I've considered that scenario where in 2021 they do 3% net margins and then they scale, but they don't reach 40, okay? So they remain around 30, and that's great. Now, remember that Facebook has a net margin of 30%, and Facebook is one of, in my opinion, the most efficient business that you can find. So that is not great as Adobe, but is still very great, considering that Palantir 16 years has never been profitable. So I want to just understand that these scenarios are optimistic, right? So even though I called bear, in reality is still optimistic in my opinion. And then the growth rate are the same. I've just changed the net margins. And we have that with the 24% growth rate. And we have a fair price today of $19. Same requirements. While in this case, I've considered the bear case. So the bear case is 28% growth until 2025, and then 21% growth until 2028. Now, I want to show you what I mean by that. So 28 and then 21, right? So look at that. 2025, we still have their expectations of 4 billion. So that scenario is actually bearish, but it's not that bearish, right? It should be really bearish if here I would have, like, for example, 3 billion instead of 4. So just remember that this continues to be in line with what Palantir has said in the report. And as you can see from here, look at the fair price with that scenario, $17 per share. So the reality is when you take those four cases, you have an average fair price of 24.55, which in my opinion can be considered as a starting point to buy Palantir at a fair price. But remember, those assumptions are actually optimistic, especially this one, right? This is the gold case of Adobe, basically considering that Palantir will do the same of Adobe stock. But, we don't know that. It's pretty ambitious, but anyway, remember that is very optimistic. So probably this is more realistic. And as you can see, even with a great growth rate, still in line with their earnings, well, if they are not able to scale them much as Adobe did, well, the stock today is still overvalued, right? So even though that's the fair price, it takes into account the gold case scenario with Adobe. While if you take a more realistic, well, probably the fair price should be around $18-20 per share, right? So when we take a look at the graph over there, is that drop, that extreme drop, only driven because of the fear of insiders selling stocks or because of the loss that they had? In my opinion, no. This is also because people probably realized that $46 per share was definitely too much. And by saying that, I'm not saying that Palantir's business is bad. It's a great business, I like it, but the fact is that you can have good businesses which are priced at crazy prices. So in my opinion, in this case, if you want to buy Palantir and more of a fair price for the stock, you can start to take the 24 area that I showed you with the valuation and then going down until basically the dip that Palantir did over there, where it is, the 2nd of December, around 20. Now, obviously, if the stock continues to go down even lower than that, probably reach around 18, 19, then as I showed you is even better, right? So those, in my opinion, are prices that can be considered to be both. Anyway, when the stock was up here, that was just crazy. Not because the business is bad, once again, but simply because you need to have a good business, yes, but also a good valuation. That was just too much in my opinion, and that's why the stock has dropped for real. Not because of the shareholders. Yes, that has helped, but it's not just because of that, okay? So that's a clear sign of overvaluation driven by hype in the market. Anyway, now it's coming back to an interesting area. So that's what I think about Palantir. If you find the video interesting, leave me a like, leave me a comment below, tell me what do you think about that. Subscribe to the channel, and as always guys, have a wonderful day.